Welcome everyone to the Kendall Report. It is Tuesday night, couple pretty crazy days. Before we get into tonight's video, make sure you subscribe, hit that like button. You folks have been doing a great job, getting well over 1,000 likes. I would like to see it even higher. So if you watch, just hit the like button. It helps me a lot. I appreciate it. So got a number of things that we need to do. We've been having so much fun on Twitter lately. It's really been fun. And I mean that sincerely. And as I said earlier in one of my posts, is I love the trolls because trolls keep you honest. They make you stand up if you're not willing to, as long as they're not like, you know the rules. Just don't call me names. You call me names, then it's over. You get unreasonable. I'm glad to have a debate the best I can. I don't have a lot of time to do those things, but it's been enjoyable. So I want to talk about something tonight. I'm going to go through, I think it's going to be worthy of everyone. And I talk every night about my database and what's going on with it, but it's kind of a quick, it's this percent bullish, it's that, and I move on. I'm going to go into a really in-depth, detailed understanding of this. Most of you that have been in the Wavetech training, you already know some of these things. But I'm going to break down exactly where we are in the database. There's more metrics to it than I show you. I'm actually working on a brand new dashboard that will really be very cool. It'll be like getting in your favorite car, your favorite Ferrari. Electric cars aren't that much fun. I guess they have a nice screen, but that's about it, unless you're in the Mercedes EOS, and that thing's a spaceship, I think. But the point of what I want to do tonight, I just want to make sure that I think it's important to understand this stuff, because I go through all the detail. I go through some of the details, but not all of the details, and I haven't really went in depth. So I'm going to go through and basically do a little bit of a class on understanding the database, because it's important. And I will tell you, you folks are going to be amazed, because you keep, the amount of bearishness out there. If I listened to all of you, I'd be selling the bottom here. We're at 4,000 right now on the S&P. I'll go through in the technicals where we are technically, and I think it's going to be amazing. I guess what I want to show you folks, and whether you're right or wrong, when you have something, I've spent the better part of 25 years working with this database. I've been in the markets for 40 years. In fact, September marks 43 years. And so I just want to tell you that what I want to show you folks, and it's important, is to understand what discipline is. And discipline is actually believing in what you do. And I believe in what I'm doing. I've been doing this for so long. I've been through so many market cycles. I've seen so many different things. And, it's really been, the dialogue has been quite interesting. And the Twitter thing it got me going again. I think it's good, though. I think it's bringing some new energy into the channel. So, if you're not subscribed to me at Twitter, go there and do that. It's expert with no E, Twitter/expert. XPERT. So go ahead and sign up, and let's. I'm around 6,000. I'd love to see that really start to grow. I like doing spaces. There's a whole lot of stuff I like to interact with you folks. But I want to go back to this database, then we'll get into the crux of the video tonight. Is I'm going to show you exactly why I believe in this thing and what it does. And so get ready for that. Probably be a longer video tonight. That will be one of the biggest sections tonight, because everything else, when it comes to these indexes, is all straightforward. And I'll just go ahead and let's get into talking about some of the things that happened yesterday. So we had a couple things. JOLTS came out, right? 11.29 million. That number keeps, there's more and more and more jobs, which is really interesting. I think this number is kind of bogus, but it's out there. So it's interesting to talk about. Consumer confidence was expected to come in at like 97.4. It came in 103.2. Best Buy beats. You're seeing some of the retailers come in. What was it? Not Dollar Store. It was one of the other dollar outfits. And they came up with, they blow the numbers off the map. And But, it's interesting because a whole dialogue that we heard going back the last couple of weeks and going through earnings was all about the retail and all that. The other thing that came out, we had Case Shiller come in a little bit lighter with year over year 18.6% growth in housing. FHA numbers came in 0.1. So that was actually better than expected. So we're seeing a couple of things. Let's talk real estate just for a minute. Is real estate softening? We're seeing more listing, more inventory. Sales are taking longer to achieve, longer time on the market. Everything's extending out. And that's how it should be. So we're starting to see a lot of things. And I wouldn't be surprised. I'm not going to turn super bullish here or anything like that. I'm going to follow the database and go through my methodology that I do and have done for a long time. But, I wouldn't be surprised if all of a sudden the inflation story comes back and the Fed's winning, and who knows how they play and twist this thing. They've got just about everybody and their brother short this market right now. So I made a comment on Twitter that people are so emotional right now. This must be some sort of ready for some sort of a bounce. I mean, I know we've only had like 3 days down, but they've been big days. Of course, Friday was a big one, and last couple of days around 1% or a little bit more. But the bottom line is, I don't know. Maybe it's just the engagement with my Twitter account, whatever it is. But the emotions are running big. So let's look at tomorrow. There's ADP coming out tomorrow. Expected to show 315,000 jobs. Chicago PMI is coming out 52.5. Not sure anybody cares about these metrics. Maybe they'll come into play. We're seeing a little bit of a bid in the market overnight. The S&P's up 12. NASDAQ right now up about 50 at the moment. So a little bit of a bid. But we basically, every time we printed a low yesterday, we bounced between 25 and 30 handles. So there were plenty of buyers starting to show up yesterday. So there was an interesting scenario that's happening from that standpoint. I just want to look at a metric here that I didn't note. Yeah, and that's the other thing. Volume's been really low. And so I think even on Friday, I talked to you folks about this, that I might have done this in the live room, so I'll mention it again if I did mention it here. But the bottom line is the futures were about 700,000 more futures traded on Friday than normal. It's over 2.1 million. Usually it's about 1.3, 1.4, maybe 6, but it was definitely 400 to 700,000 more futures contracts coming in. But the volume on the exchanges on actual stocks were very low. It was actually down 5.7 and less. And depending on if you start picking on just exchanges, volume was pretty light. So there was just an imbalance of orders that are going on. And I've done this before. I won't go into it tonight as far as what really price discovery, what causes price discovery, and it's not volume. And I'm not going to go through that, but I'll just say it's not volume, okay? It's the aggressiveness or one-side trade. We had one-side trade the last several days, and the markets have been pushed down, so we know all about that. Let's talk about, let's see, I'm just looking at my notes here. This is a final day of the month. I don't know if there'll be any balancing or anything. I'm not sure that's a thing. We could see maybe some short covering into the end of the month. And I will go through the details, and I'll mention it right now. Based on some comments I made on Twitter today, is that I said I would cover the expectation for this third quarter rally. And I know everybody, the rally's over, it's done, the market's going to zero, all that stuff. 2008, 2009, 1929, no, it's 2022. And so I just hate all these comparisons that get out there from time to time. So I don't like comparing previous markets to current. That's silly, because there's not one metric, one thing that's the same. We're not in 2008 and housing crisis. We're not in a dot-com bust. We're not in 1929. There's a whole set of circumstances that are different here. And listen, this is a very dynamic environment. I'm not going to argue that. And I'm just telling you, with the metrics that I'm seeing, I will follow this stuff to the end of the world. And that's what discipline looks like. So if nothing else, you'll watch me go down on the dagger if that's the case, but it never happened before. And you have to remember, and I'm going to show you tonight, once you see tonight's presentation on the database, you're going to understand a little bit more on where I'm at, because we're actually at the rotation phase of the database on a short term. Anyways, I'll save that for a minute. So, all right, so let's go ahead and check out the database. Let's do this next section, and I'm going to take my time and get through this, because I think it's so important, if you're going to be on my channel and watch me, that you understand when I'm talking about these 16,000 symbols and all this stuff, what these metrics really mean, and hopefully you'll be able to read them better. And those of you that may end up actually just subscribing for $97 a month to Wavetech to have them on your desktop, not to mention all the other signals. So anyway, let's dig into the database. Okay, shock, folks. I'll go through the normal metrics and then we'll get into what all this means. We are at 60.54. We had 871 sell signals and 77 buy signals. And it's amazing to me that the database is holding up this well. And I'll show you in a minute why and what's going on with everything. I think once you see this presentation tonight, hopefully I get one of those moments where you get what I call the aha moment. So I'm going to attempt to zoom in on an area of the database so we can dig into this just a little bit more. Okay, this is really where the crux of some of the data starts to come into play. And what we're seeing here, and I'll just describe what we have. We have two models that we run in 1, 2, 3, 2, and they run on a daily, and the same models run on weekly charts. Actually, on PortfolioXpert, we can even run them on monthly on secular trends. So what we're doing here is looking at trend following, but this is the stats that come out of this entire database of 16,000, basically 80 symbols right now. What we get out of here is that the average days long, you look at optimize. Let me just bring up something here so I can point exactly so you folks know where I'm at on this page. So right here, optimize daily, you'll see the arrow here. What we do is we look for the best total net profit on one of our models for every symbol, all 16,000 symbols, and we map them out. So optimize daily means it's best of breed, best symbol for best model for each symbol that has the best total net profit. Okay, and believe it or not, so about 68% of all of the symbols are profitable, but not every symbol is profitable. And I won't go through the metrics of the database, but we do have a metric internally that tells you whether the model does a good job or not. But we're going just to look at this on a broad base on exactly what happens. So it tells us that the average days long on an optimized model is 39. And you'll notice here there's a couple other metrics here as we go across. There's the daily 1, 2, and 3, 2. So those are the models, and we break down the stats on those as well. You'll notice that 3, 2 has a 43-day holding, and 1, 2 has a 33-day holding. Okay, so what this means is the 1, 2 model actually responds a little quicker to bottoms and tops, but they don't always make the most profit. The 3, 2 is looking at a little bit bigger trend. It's not a big deal, but that's why when you look at the two, we average out to 39.699. So let's talk about what's going on currently. The standard deviation here is 10.6. The current deviation here is right here is 22.59. The next one, duration percent fulfilled. Okay, so let me explain what that means. That means that right now the average days holding of the 39 is 22. So therefore, 56.8% of the duration of the holding period of these models have been experienced already. Okay. Now the next metric I want you to see, and this will go faster. You'll see here. The next metric is the average profit. These are short-term trades, are 11.45%. The standard dev is 41. There's quite a bit of volatility in this. Some of these symbols make a lot of money. Current average profit right now is only 1.6, and percent fulfilled is 0.14. So what's happened, and this is when I talk about the rotation phase, you have to remember, if we look back over, you can't see this on the page, but I'll just tell you right now, and I'll show you in a minute. Over the last 2 weeks, there's actually been 15,000 sell signals only, and these are rotating, right? And there's only been about 900 buys. So that's the last 2 weeks. But we go back to June, this is when we started to get lots of buys. This database was down around 10 or 12%. It went all the way to 84%. Let me just bring this up here. So the reason why I want you to understand this is the database has, what's happening right now when we see these sell signals, it's most likely taking profits on trades that it bought almost 2 months ago. And these days that I'm talking about, 39 days, that is actually 39 trading days, not calendar days. So that is right there, the better part of 2 months. So typical hold is 2 months, sometimes a little bit more. And these can extend. It doesn't mean they get out 2 months. If I brought up an individual symbol, you'd see we have a map for every symbol in our database, what the average trade is, what the average duration is, what the metrics of what we call ER, effectiveness ratio, how good is it? So I could go and take every symbol of these 16,000 and break down internally how good these models are on any individual symbol. And that's what we teach people on how to use this software, is that you want to get to those best metrics. Now on PortfolioXpert, we have a query tool. You can just query the entire database and bring up the best symbols on the database and build a portfolio with it if you want, if you don't care what the stocks are. Normally we combine fundamentals. We provide a fundamental screening service that is institutional grade that we use both for our institutional clients and for our retail. The reason why I want you to see this is these metrics are rolling all the time. So while the database is 60.54 in percent bullish, the actual internal metrics look a little different. So what we're seeing is a recycling. So right now the average profit, there's not very much profit earned because we're actually taking a lot of profits off. So most of the new trades, most of the trades that are on the database right now are actually rotating in new. So we're getting, you see these 100, 200 buys and sells. We're getting net, we're getting sell signals right now. And like I said, we are at 84%. And over here, I know these might be a little small to see, but over here it shows in the last 2 weeks what each model, both intermediate and weekly, have done. So I'm just going to summarize this. But I want you to understand that there's much more to each one of these metrics. And people go, oh, Bob's database is lagging, it's not right. No, this is about individual symbols. And it equates, though, to how the market rotates and what the breadth of the market. So any of you that have ever used the trend index or any kind of, looking at the buy-sell part of the markets, the up-downs, all that, this is a little different. This is telling us how many stocks are in a trend mode or have trend probabilities. And when you're at this level of looking at quant, you have a much different perspective than if you're just looking at index and then it looks like the end of the world is going. I can tell you in 2020 and January and February, we were selling both hands prior to the market. When the market was at the highs, it was starting to roll over. We were seeing a massive amount of selling. Those of you that are my institutional clients, you know, probably you called me and said, hey, why are we getting all these sell signals? The market looks good. It's at the high. And I said, I don't know. Just keep selling. Do what it says. And of course, we came into the pandemic and all that stuff. And then in March 23rd of 2020, we started buying both hands. Excuse me, we bought 10,000 symbols, I think, in 3 weeks. And that was the beginning of the recovery. So the reason I want to go through this, because I think it will help a lot of people that run into this channel to understand what the metrics are that I'm giving to you every night, and that there's much more in depth to just the 60% bullish. Okay, it's 60% bullish. Right now, there's 9,732 symbols that have trend mode. There are 6,343 symbols that have no trend. In fact, they're probably downtrends. This is a long-only platform that I'm showing you here. But the point of all this is to understand these metrics, understand exactly what kind of things that I'm seeing here, and why I continue to put out, a tag like market searching for a low, because we're not getting massive amount of attrition coming in. Maybe there's 2 more days down and the whole thing just pukes out. If it does, I'm going to be going with it. It looks to me like there's still a slightly positive rotation that is likely to occur here. I know this database forward and sideways. I've been watching it every day since literally 1996. So I understand the ebbs and flows, markets, and all that stuff. So hopefully you found this part interesting. I know I went through a fair amount of details. There's even more I could go through. I didn't touch on the intermediate models, and the intermediate models right now are 35% long. I will touch on that just for a second. And what that means is the longer term aspect of the market, or intermediate, means there's a 200-day holding period. We're at 35%, so 7 out of 10 stocks have no trend. If you look at our portfolios, I could go through another session tomorrow night and show you what our portfolios look like. Most of them are 50, 60% in cash. We're in total protect mode yet. We're not that bullish. And when I'm looking at these metrics here, I'm still looking at this, and I'll talk about the viability of the third quarter rally when I go into the next section. So once again, I'm trying to get out of this loop I'm stuck in, but just know there's a lot of metrics, a lot of things in depth into this database that goes so far reaching that it's very hard to even describe. I could do a whole hour, maybe 2 hours just on the database, talking about metrics, the dynamics that happen, all that stuff. I'm not going to bore you with that, but I do want you to understand there's much more to it other than 60%, and that also that each one of these symbols are doing stuff. So let's get into the technicals. Okay, so we'll start with the S&P. It's fairly interesting because we are, if you notice, the PPMs are starting to turn up. We're trading 4,003. We're up 16 handles. This is about where the recovery rally got yesterday. If you're paying attention, it looked amazing overnight, right? Those of you that are watching and you're overseas, I mean, we traded up to 40.72 overnight, and we plummeted down to, let's see what the low yesterday was, 39. Hang on, this thing is not coming up right. I can't see the numbers here on my screen. let me, yeah, so the low was 39.64. So let's talk about a couple metrics there that are happy. So if you did from the lows of the 36.30 level up to the 43.27 level, and you looked at the retracement, 39.81 is 50%, 0.618 is 3,900 even. So we printed just below that level, 39.81, with that low of 39.64. It's kind of interesting. My market grid is stuck on monthly. There we go. Now I've got it. All right. Sorry about that. All right. So far overnight, tonight, we've had a 39.82, 4,005. We're trading 325 right now. We look at the market grid. We didn't get to S1. 39.59 is S1. That would actually represent a new low. I don't think we're going to get that. I think we should recover toward at least R1 right now is 40.13, R2 40.43. And if you notice, R3 is 40.73. That's where we got in yesterday's session. And I still need a close. Now we need a close over 40.62 to get this thing back bullish again. But I think there's basically completed an ABC. We could see another ABC up, and I think another ABC down, and we could retest these lows going out maybe 2 weeks from now. So there's not anything from my viewpoint that it looks like we're just going to recover and go straight up. So I want to talk about this pattern as far as the quarterly update goes. And I brought up the quarterly chart the other day, and we may have completed it at 43.27. That may have been it. I basically called that perfect. That was the target zone, 43.20 to be exact. And we printed 27. And then we came off of that straight down to where we are now. I do believe we'll get up at least up to the 21 period moving average right now, 41.60. That was kind of the breakdown point. And as I talked about before, I'll show you on screen, the original buy was back on 7/18 at 38.78. We got a sell at 41.47. So we've had no short-term buy signals since the 23rd. Everybody seems to be thinking I'm long because I'm talking about a bottom formation. I still think this is a bottom formation setting up. I think this is potentially a right shoulder. And I think there's a better than even chance that we could challenge the 200-day moving average again, which is 42.91 now. That number's dropping every day. So that ultimately would mean a retest of the 43.20 highs, but we'll have to see how this sets up. I am impressed. We're already seeing the PPM starting to turn up. PPM 2 is at 0.10, PPM 1 at 0.66. So it's got a ways to go to get in any kind of bullish mode. And what that tells us, and I talked about this number last night, is that I thought 40.80 to 40.20 was going to be the resistance. That's the 21 period moving average. Now, yesterday we traded 72, so we already hit 40.80. So those of you that were watching somehow thought that was a good point to buy or something. I'm not sure. That was the top of the expectation for yesterday, and we got rejected from that level. The rejection was bigger than I thought, and I mentioned last night that if we took out the low, then we would go to probably at least an S1, S2, and in fact, yesterday we went down. S2 was 39.82, so we went just below it. S3 was 39.57, a near hit on that. And there was a lot of great buying opportunities, as I mentioned earlier, for that to go. And I'm going to show you one other thing here. We're going to go over to the trading view with the indicators right now. It's hard to see over in the far left because I know it's very small, but I'll read them to you. The downward target was 40.15, 39.62. So we went right to fib target 3 on the indicators, and that also, as I mentioned, is roughly between a 0.5 and 0.618. These markets don't bottom perfectly on fib numbers. They come into a range. I always have said for many years is that the markets determine the low, the high, what the actual number is. You can do Fibonacci projection, do all kinds of stuff. But in the end, well, if today ends up being the low of this pattern, then it will be between 0.5 and 0.618, which is 80, I've got the numbers here, which were 3981 to 3900 is 0.618. Those are rough numbers, plus or minus $1 or $2. But the point is that this fib target put us right there. That fib target came out just a couple days ago, and right after the break on Friday, and it gave us these targets. So this is probably a critical point in the charts from that standpoint. And I'm just going to bring this up. I think I can do it here. And yeah, I showed you this. This is the quarterly chart here. And a quarterly chart, we still have that rising 10-period moving average through here. I'm going to go up to indicators, and I'm going to throw in the market grid here. And I just want you to see that we're trading within. This is not going to update until the end of September. So it looks to me that we still have a good potential of getting up to 43, still coming up to these numbers. Once we see more of this pattern that we're in right now, whether we end up being a low, do we go to 3,900, do a 0.618 retracement? Does it just collapse from here? We don't know that answer right now. I'm just telling you, there's nothing in there that's pointing to there's a low at the moment, other than we're looking at some Fibonacci numbers, which are basically made up numbers, and we're watching for the markets to give us a reversal or something to go off of. I thought yesterday there was a couple of times where the market was very vulnerable to explode to the upside, back to the upside, and set up an outside reversal bar. Never happened. There was bids out there, but there were equal sellers. They were laying out there at 4,000. But I just want you to understand, I'm going through a lot of detail tonight because I want no mistakes on what I'm saying. I want to make sure I'm methodically going through this. So if you have the patience to get through this video, good for you. But the point is that what we're seeing here from the standpoint of the quarterly trends are still on the upside. The PPMs are all turning back up here, and the absolute, this is going to be interesting. So as soon as we hit the end of September and we get the update, I'll bring up the market grid. What we should see on market grid is it should turn up. If it turns up, what that's going to tell us is that there's most likely going to be a sideways pattern continuing on the upsides. So we'll see how this all goes. I told you last night, don't see the collapse. You can say I'm wrong. You can say whatever you want. This is what I'm seeing. This is my work. This is what I do. Okay. So based on database, based on the trends and things that are happening here, that's the best that's what I'm going to tell you, because that's what my work tells me. And so we're still seeing a major uptrend here on a quarterly basis. We went through the monthlies the other night. I'll do this as we get into September and we see what kind of patterns set up, to see if we're going to be able to get this market to set up a bottom pattern here. We're not there yet. There's nothing that says there's a bottom. We printed a new low on this move right now. Until we see something that tells us a bottom, that's what we'll say. That's why I put the tag on this thumbnail tonight, is that market's searching for a low. And I believe that's what it's doing. I don't think it's, I think there's going to be a decent bounce somewhere in here, whether it was today's prices. It was pretty erratic. If you watched the intraday trading today on the S&P, it was very volatile. And once again, we had a very thick order book, which tells me a lot about this. I'm going to bring up just for a second here This is my day trading screen. And I'm just looking at this. On the left-hand side is the 5-minute. This is the 1 minute on the right. We don't have any current upward projections, but we're getting over the 200 period moving average on this 5-minute, which is typically a turning point, but there has been a decent uptrend here, but there's still a lot of work to do to get this going. So as I go back to TradeStation here, well, we want to look at, like I said, probably R2 4043 would be pretty good. If we did print S1, we'd get down to 39.59. If we get to that level, we could easily, if you notice, S3 for tomorrow is 38.99, which is 3,900, which is 0.618 retracement of that rally that I talked about from June to the 4,300 level. So there's just a lot of dynamics going on here. No position. I am going to show you one thing that is out there, because I'm going in depth tonight, is there is, on a weekly basis, the intermediate models do have a long at 41.37. So it's underwater, $1.37. It's not unusual for this thing to go sideways or have some adverse movement before it goes. But this retracement, if we get, there is a pivot number down here at actually 39.26 is also another key number that I hadn't seen before. So watch for if 39.26 to 39 even, that area should hold. If it doesn't hold, then you guys are right. I'm wrong. We're going down big, and I should see database turning. And like I said, most of my perspective on everything I do is based on how our portfolios are positioned. And like I said, we've got well over $15 billion running in our models. And so they're positioned, most of them 50, 60% in cash, and very few people run short-term strategies anyway. Most of them are intermediate. So we're still highly in what we call protect mode on the downside. So there's no way you can make me some perma bull. I do think we're going to see everything I presented to you. I still think there's stability setting up here. Whether we can get over the 43.20 number, have no idea at the moment. We'll see what patterns set up. And I walk this forward day by day, and I'm hoping that we see something that will look interesting. I think what we're probably going to get today is an inside day on all of these indexes. An inside day. Yesterday, like I said, we had the low at the 60 handle. Let me bring that up. The low was, bear with me 1 second. I'm on weekly. We're at 64 handle. And if we did take that number out, then there's probably more. 26, 39 even would put us into the extreme. Beyond that level, it's going to get very, very hard, especially I think if that happens, we'll see some more deterioration of the database on the short-term level, and maybe then it gets more critical. But that's still, if you think about it, within the context of a right shoulder, of any type of corrective phase, we're still in the means, within the bounds of those corrections that happen. And this is interesting because people get so bearish that 50, 60% level, maybe it even goes to 0.76. That's an extreme. But the point of what I'm saying here is this is really just a typical correction right now. And it's being blown up to be, because everybody's extrapolating out all of the bad things that are going to happen. And meanwhile, the metrics still coming out of the economy. I realize what the Fed's doing. I've been around a long time. I understand what's going on. I'm just telling you, and I'll keep arguing that the market is not the economy. And so we may see some pain. We may see these things, but there's still cash looking to go to work. And it was very evident today, and it's somewhat evident tonight. All right, I finally got through the S&P. Should take me no time flat to get through the rest of the show. Appreciate everybody's patience and participation, because there's just a lot of things that I feel like I need to clarify. So sometimes you got to do a little longer stream here and just let it flow. So let's go ahead and get into the NASDAQ. So same pattern that's on the NASDAQ. The NASDAQ let that trade go at 12,933. So it got out, it got in over on 628. So it got in earlier and exited out over here on 823 as well. It has no positions. But look at the PPMs already starting to turn up here. They're not positive by any mean. Negative 0.83 is a big number on PPM1. And what that tells us is there's major resistance at 12,957. But we look at the market grid for today, 12,257 would be S1. I don't, just like that would be a retest of yesterday's low. I don't think we get to that level. We could. If we get through these levels, then look at, once again, use that S1 as a pivot. We get below there, S2, S3, pay attention to these things. Those of you that have the indicators, you can throw this up on an hourly. You can fine tune this a little bit. Hourly, 15-minute, 30 charts, 30-minute charts, all of that. But the bottom line is we've got major resistance at 12,800. That number's dropped 850. That number's dropping about $100 per day. So that's going to be 750 the next day. So there's going to be plenty of resistance, and we're going to have to get above the first derivative on the PPM1 before we can even start thinking about seeing a challenge of the 10-period moving average in a positive way. So there's a long ways to go. There's not anything here that shows that we have a bottom yet. And that's what we're looking for. That's why I'm telling you, we're searching for a low here. We'll see what kind of action we get. And, you know, the old saying, every industry, there's old traders and bold traders, but there's no old bold traders. So you don't want to pick the bottom. Just be patient and watch for this thing. And I'm telling you, we will have the metrics that come out to tell us when and if there's going to be a rally out of this level. My expectations is that there will be at least getting back towards the 21-period moving average, 13.1, we'll call it 130, and the possibility of getting back to the 200-day moving average still exists. And like I said, all I can tell you about this third quarter rally is there's still upside bias as we come into September. I know what we've been through in the last couple of days, but that's only the last couple of days. If you go back literally the last 3 months, go back to this coming into June, July, and August, this is just a corrective phase. We'll see what the pattern sets up. All right, we'll look at RTY next. And same pattern. Yesterday, we were able to get just a little bit below the 40. It was holding really well. Right now, we're the same pattern on the PPMs. Everything's the same. And I would alert you if there was any kind of, they're so closely correlated that there's really nothing there to look at. And in fact, I'm just, like I said, I'm looking for something to go with here. PPM1 has to penetrate through the first derivative or the second derivative, the green line here. Till that happens, there's really no reason to get too bullish about anything or even expect very much out of this market. If we get a big upward reversal day, then there'll probably be a retracement value, something to play off of that number. I'm just going to pop this up real quick. We haven't looked at this for a while. This is NASDAQ, S&P versus NASDAQ, MDY, Russell versus NASDAQ, and everything else is been doing a little bit better against the NASDAQ across the board from that standpoint. Next, we'll look at treasuries. Treasuries continue to climb, but we're starting to see it beginning to peak out. PPM1 is stalling, but we're still at 0.95 bullish, 0.83, 0.26. So we're still in that uptrend, where what that tells us as the 302.5 level is support right now. So we should stay above that level, but my expectation is we should start to see the 10-year pull back a little bit. There's really not just a bias to the upside. I think that will fade just as we come toward the end of the week and we get the employment numbers and all that. We'll see. I think we're just going to see a backing off here, but we're definitely still in a big uptrend here. Definitely a trend mode to the upside. And as I've talked about 316 should be the peak of this market right now. We looked at the market grid last night, and 314 to 320 is the extreme. I don't think we print 320, but 314, 316 should be the top end of this. Yield curves is flattening again, so we're starting to get negative on the 530. So we're definitely seeing some flattening, and that's been the story for the last several days. You can see this on the far right. You can see this pattern downtrending here, pretty substantial. So we're not quite down to the worst. And of course, still the talk on the street is that the 210s are the widest they've been forever and ever, and that means just so you know, on the whole yield curve premise is typically the yield curve, when it does invert, it's close to a year and a half before from the beginning of the inversion to do that. And I did promise you something which I'm not set up to do, but I will do tomorrow night. I'll make sure I make a note to myself that I would go through my expectations for the yield curve as we come into year end and probably a little bit beyond. I do believe the Fed's going to continue to raise rates, and they're going to get 3.5–4% on the Fed funds, and everything on the back end of that will be inverted ultimately. And I'm still a believer in the recession. I'm not saying there's not going to be one. I'm just looking at metrics. Like I said, when I went through all the in-depth understanding of our database, is that we're looking at a lot of symbols. And there's a lot of symbols still in trend mode on a short-term level, and they also have rotated a little bit. So there's some refreshing of the database that happens. So as always, I'll continue to talk about that. Hopefully you folks found that earlier presentation useful. Next market is crude. This is the weekly crude. We managed to get up just above that 96 level. Let me bring this up on screen here. This is the weekly. We got 97.66, back at 92.43. And we're just going to continue to follow this green line, which is the 89.38 level, is going to be the bottom end of this. What's interesting about crude is we're still positive on ppm 2 and 3. ppm 1 is a negative 1.22. And I've talked about this before, is that the 10-year and crude oil have very similar configurations. I don't know why they're so correlated from the standpoint of the PPMs, how they look, because we have one really negative down on the weekly. Now on the 10-year, it started to dissipate quite a bit, but we're still seeing this ppm1 very negative, which gives us basically a conflict of where the resistance is. So the resistance is between the 10 and 21 right now, which is 90, 94, 92, all the way up to 99, 60. That's where the numbers are telling us that's going to be the upside. 80, 89, we're going to go 89.40 is going to be the bottom end of the range. If we look just at a market grid, S2, 89.11, S3, 87.02, that would be a bargain. There should be a trade-off of those lows if you get down there. We'll stick with the weekly charts or look at gold. Gold continues just to hover around the 200. We're down at 1734. S1, 1739. S2, 1727. We almost traded down there. This is a weekly again. And on the upside, 1760 was R1. So for most part, we've done S2, we'll call it S2 R1 for the week. But we are continuing to see ppm3 turn up. I think next week, when we come into next Monday and Sunday night, we should be able to look at this and see if we're getting any type of move up on ppm2, because when that starts to turn, then we got a shot of trading back into the 1800 handle, maybe 1830 on the upside. But everything's going to be pretty muted as we go forward here, especially with, I went through the Dow last night. You're going to have absolute pressure due to the Dow continuing higher. And I don't see that trend breaking just yet on the Dow. So therefore, we'll be at least limited to what upside there is. And potentially, there's a place where gold could just fall out and print down into these Fibonacci numbers back around 1700 again. We'll see how this thing all unfolds over the next couple of weeks. Okay, final market. We have Bitcoin. Bitcoin continues to really, like I've been saying, defy gravity, if you will. It also has pattern. It has some Fibonacci targets above it. There's plenty of resistance. 21,594 is resistance. Our high so far, this is weekly, 20,567, low 19,566. And S1, 19,158. R1 is what we've traded so far, 20,562, high 20,567. So we're S1, R1 at the moment. It looks like to me there's still a little bit more, maybe printing as high as 21.3, something like that on the upside. And the vulnerability to the downside is there, but it doesn't appear to be that evident at the moment from the standpoint of looking at the intermediate charts. Let me go over to the daily because I have not done that for a number of sessions. We get this scaling so we can see what's going on here in the daily. So daily, we still have a negative ppm1, but we are trading above the 10-period moving average here. That's at 20,009. I'm sorry, we're trading right at it, 20,927. And ppm1 is trying to turn up ppm. They're all negative. So we still have downward pressure. Just like I was pointing out, 21,000, I'm going to put 21.3 is going to be the upper side of this, and go with the S1 number for the moment on the weekly chart that I just showed you. Okay, folks, this is going to do it for the show. Thanks for coming in. I haven't looked at any of the comments because I've been focused on the presentation. So hopefully you found use in going through the database at this next level. I think there's more I need to teach you about this and why it gives me so much confidence. And, you know, I know there's people that watch this channel that have used our software for a long time. So if you think about it and you're okay with public comments, please make a comment, because you've been through these cycles with me before. Many of you through 08, 09. That was an amazing moment in time, actually. So anyway, folks, thanks for watching. Remember, follow me on Twitter. That's Twitter/PortfolioXpert. I'm sorry, PortfolioXpert, just expert. X, no E in expert, XPERT. That'll get you there to my Twitter handle, and hopefully we'll be able to chat there. I'm trying to be more active on Twitter. Make sure if you haven't got these indicators, get them. There's a 9-video course out. I worked on another video for the PPMs last weekend. Did not quite get it finished. We'll hopefully finish it here in the next couple of days. Also, those of you in the live room, I know I'm mentioning this at the end, we'll see you at 1 o'clock. And folks, we're opening up our Discord channel, and it will be by invite only, but it's going to be about discussing using the indicators and all the, basically, we've got some very proficient people. We're going to have some moderators. I'm going to be in there from time to time. Some other folks on my staff will also be there. So make sure if you haven't got them, get them, and there'll be a way to even get into that Discord, even if you're not part of the channel. We're going to have some fairly stringent community standards that have to be met there. So just so we keep everything nice and sweet and everybody happy. So anyway, folks, thank you so much again. And I'll be back tomorrow night, same time. Those of you in the live room, see you at 1 o'clock, and looking forward to that. Have a great evening. Have a good day trading tomorrow.